Hey, there's John.Hunter, your mortgage guy, coming back to you again this week with another weekly rate update. This one for the week ending in April 19th. So, predicting rates has always been a tough business, and this year is no exception. Rates in the last couple of weeks have really spiked, with inflation proving to be a lot stickier than we had predicted. So, 30-year fixed right now is averaging about 7 to 7.5. 15-year 6.5 to 7. FHA, that's 15-year fixed. FHA is about 7 to 7.5. VA 6.875 to about 7.5. Down payment assistance anywhere from 7.375 all the way up to about 8% today. And remember, rates are based on credit score, loan amount, loan type, loan purpose, property type, sometime even income, whether you're a first-time home buyer. There's a lot of variations here. So if you want an individual quote, just reach out. I'd love to help you out with it. So, the prospect of 3 rate cuts, which is what the Fed predicted earlier this year, have been pretty much taken off the table in the last 2 weeks, with a couple back-to-back inflation numbers coming in much higher. Has really made the Fed pause a little bit. And we're going to have to see what happens here in the next, couple months. But, right now, the prospect of rate cuts, they cut it down back from 3 to 1.5 is what the market is pricing in right now. So that's why we really saw this spike in rates. The prospects were really for the Fed to start doing it in July, and that may not be the case now. But next week is PCE, which is the Fed's favorite inflation report, and that's PC for March, and that stands for Personal Consumption Expenditure. And this is the Fed puts the most weight on this inflation report. So if it's consistent with the last couple, it'll be pretty hot, and that'll just make the Fed sit tight and do the higher for longer mantra that they've had. So hopefully that's not the case. I personally believe that these numbers are a little baked. I was wondering how the political season was going to affect rates. And I really thought the Fed would have a lot of pressure to cut sooner than later, to have the market really feel it before the election. And this is my personal opinion, but when you look back at the last maybe 10 months worth of employment numbers, just about every employment report that has come out has been revised downward, which I think is a little suspect. I think maybe the powers that be might be baking these numbers a little bit with the political season to, be able to tell the American public that, hey, look at these reports. The economy is doing a lot better than the rest of us all feel. And I think it's smoke and mirrors. And I think that in the end, this will shake out as kind of a BS trend. But, that's my personal take on it, and it's probably full of it. So we'll have to see. Next Thursday, we're really going to be able to tell if that's the case or not. So, come on back. I'll be back next Friday, and we're going to talk about that. And I've got another video coming out next week, end of next week, that is all about some changes to the real estate commission rules, if you might have heard about. And it's pretty dynamic. There's some new information out from Fannie Mae. So come on back for that. And every week we got these rate updates, keep you in the know. So John.Hunter, your mortgage guy, like, subscribe, and I will talk to you soon. Bye-bye.